Another stock that I have rejected today is called as SAT Industries. I want to discuss why I rejected this stock. And let me reiterate, why do I keep making these videos where I am talking about the stocks that I am rejecting? Because I strongly believe that your trading performance is not as much as a function of the stocks that you select. It is more a function of the stocks that you choose to reject, because the market will keep throwing opportunities at you and you have to decide whether you want to take that opportunity or not. And the more you reject, the more you will find better quality setups when you're actually pulling the trigger, when you're actually making that investment, or when you're actually taking that trade. So I will keep making these videos where I am properly discussing why I am rejecting a particular stock. I want to give you all the reasons why I am rejecting a particular stock so that you know exactly what I am looking for in a stock. So this is filter is called 3-month RS80. So one stock that came in this filter is SAT Industry. So let us open this. I have opened this on MarketSmith. I will also open this on the daily time frame chart. So let's see. Let me see SAT Industries. Okay. So this is the stock. Now, as you can see here, before even I go to MarketSmith, I have already rejected the stock in my mind. Why, I will tell you. See, I am looking for the 50-day simple moving average to be above the 150-day simple moving average, and the 150-day to be above the 200-day simple moving average. Now, the blue line is the 50-day, the green line is the 150-day. Okay, the red line is the 200-day. So I want this red line to be below the green line. So I want 50-day, 150-day, and 200-day. That is called as a stage 2 stock. So this stock is still in stage 1. It is not yet reached a level where I might consider buying the stock. Okay. As long as it is not blue, green, red, I am not interested in the stock. So within seconds, within fraction of seconds, I have rejected this stock because it doesn't give me that blue, green, red combination. I don't even want to look at the stock. But there are other factors which I want to discuss, which make this possible. Okay, why is it that this stock, in spite of starting to move up, the stock has gone from 84 to about 144. That's a fabulous run. Okay, in spite of that, you still don't have the stock in stage 2 uptrend. Why is this so? Let me discuss that. Okay, so let's go to MarketSmith. Let's open this. See, this is MarketSmith data. As you can see here, there is a long base formation here. See these two dotted green lines. Okay, so since 21 August 2023 till about September 2024, it's a period of 1 year almost. I would say more than 1 year. The stock has remained flat. It has not gone anywhere. It has remained stuck in this box. The two green lines drawn by MarketSmith. So this is basically the third base. So it's a middle stage base. Okay, but still the stock has fallen down so much that it has not yet come to stage 2. And I will tell you why it is so, why the stock is stuck here. You see minus 74% quarterly growth rate. So the earnings have fallen. Plus you see sales growth, quarterly sales growth 11%, 9%, 2%, 8%, minus 6%, not encouraging. The number of funds that are holding on to the stock are decreasing. So earnings growth is poor. See, it's decreasing here 1000%, 53%, 30%, minus 74. You see the trend. Okay. Earnings growth declining, sales growth declining, number of funds holding the stock declining. The price strength is 67, which is poor. EPS rating is 58, which is poor. Master score is 51, which is poor. It has institutional demand because recently the stock has been going up. It has good group rank because probably the industry of that in which the stock is doing very well. The PE ratio is very small. It is near the low end of the PE range. Cash flow is negative, which means the operations of the business are not generating cash. Although there is a profit in the business, but there is no cash flow in the business. Okay. There is a difference between profit and cash flow. You can show very good profits, but if cash flow is not there, which means that profit is a fictional profit, it is just showing up on the income statement, actual cash has not come. Because what happens is, in a company, when you sell a product on credit, the cash has not come into the business, but the sale price is booked as revenue. That's a problem. So that could be a problem with this company. So although you see profit, you see EPS here, but where is the cash flow? That's a problem. Return on equity is fine because the profit shows over equity. So that's fine. But see, long base, the stock is not going anywhere because the fundamentals are dicey in this company. Okay. If you look at the weekly chart, see, you can clearly see this is the earnings line. Earnings line is falling. The stock has been going up. So this is the first base. Here somewhere is the second base. And now this is the third base. But the third base has lasted for 1 year. That's too long. I mean, that's too much of a time for a base to last. A base should be like 7 to maybe 30, 40 weeks. Okay, 7 weeks to 30, 40 weeks, or 5 weeks to 30, 40 weeks. This is too much. Okay. But still, Market Smith categorizes it as a proper valid base. Their criteria, I think, is from minimum 7 weeks to 65 weeks. They will look at the base. And if it extends beyond that, then it is not qualified as a base. Okay. See, the price is very close to the pivot point. So that's the buy point. But I am not interested in the stock because it is not in that stage 2 category. Although it's going up, but I want that proper moving averages to set up properly for me to take a position in the stock. So you see how many negative factors have been piling up ever since I started discussing this stock with you. The chart does not look promising. The fundamentals does not look promising. The cash flow is negative. All the ratings and rankings are not great. The base is too wide. Okay. The price is still 8% below the pivot point. And the pivot point is also not set up in a way where you have tight price action on the right side. The stock has moved up very fast in a very short period of time. So there is nothing in the stock which will make me feel positive about this particular trade. Obviously, this is not a positional trade because it doesn't have much fundamentals. Everything is declining. But even for a swing trade, I want these numbers to be, all three numbers to be more than 80. Okay. Not the case. Not even a single one is more than 80. So straight away, I reject the stock. So you see how simple it is. I don't even have to look at all this. As long as I see the, just a second, as long as I don't get blue, green, red, I'm not interested. Okay. When I get blue, green, red, then I go to Market Smith here. Okay. Or vice versa. When I see good factors here, then I just check whether I get the blue, green, red combination or not. So moving averages are important. The base formation is important. Price action is important. Everything is important. You have to look at a lot of factors because you are going to put money at stake here. So be very careful. This is an extremely loose base. Okay. The base needs to be tight. Okay. Before you commit money. So I hope you understood the factors that I'm considering. Please like, comment, and share this video so that other like-minded people like you who want to become professional stock traders can benefit from this knowledge. Thank you so much.